Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we're diving into a proxy statement from Terreno Realty Corporation. Get ready because we're about to uncover some interesting details and maybe even a little bit of corporate drama about who's staying and who's going. This report is all about the upcoming annual meeting where shareholders get to vote on important stuff like who gets to be on the board of directors, how much the executives get paid, and which accounting firm gets to check the books. It's like a corporate election and we're here to break down the ballot. First things first, this document is officially filed by Terreno Realty Corporation, so we know it's coming straight from the source. It's a definitive proxy statement, meaning it's the final version being sent out to shareholders. The meeting is set for May 6, 2025 in Bellevue, Washington. Stockholders will be voting on a few key proposals, which is the main reason for this filing. You'll be able to vote on electing 7 directors, giving a thumbs up or down to executive compensation, approving a new equity incentive plan, and deciding on whether or not to keep the current accounting firm. Let's talk about the election of directors. You'll be voting to put 7 people on the board, each serving until the next annual meeting. There is a major change coming because one of their board members, Dennis Polk, will not be standing for re-election, which will reduce the board from 8 to 7 members. Besides the directors, it's good to know who the executive officers are. Blake Baird is the chairman and CEO, Michael Koch is the president, Jaime Cannon is the chief financial officer, and John Meyer is the chief operating officer. These are the people running the company day to day. Now for the juicy part, executive compensation. Shareholders get to give a say-on-pay vote, which is basically an advisory vote on whether they approve of how much the top executives are getting paid. It's non-binding, meaning the board doesn't have to listen, but it's a good way to gauge shareholder sentiment. The wording of the proposal is straightforward. Do you, as a stockholder, approve of the compensation of the executives as described in this proxy statement? The board recommends you vote for. Next up is the approval of a new equity incentive plan. This is about setting aside shares of stock that can be given to employees and make sure everyone is aligned with the company as they benefit when the stock goes up. They're planning to make it a little over 2% of the outstanding shares in total. Finally, there's the vote to ratify Ernst & Young LL as the independent accounting firm. This is basically a formality to get shareholder approval for who's checking the company's financial books. The board is recommending that shareholders vote yes. Speaking of Ernst & Young, let's see how much they got paid. In 2024, audit fees were $2,509,239,499.23. That's a pretty significant increase. It could mean a few things. Maybe the audit was more complex this year, or they needed more work done. Interestingly, there were no fees billed for audit-related services. And same as last year, there were also no tax fees billed by Ernst & Young. All those fees went directly to audits. Now let's shift gears to executive compensation. This is where we can dig into how the company pays its top people and why. Terreno's executive compensation includes 3 main parts. There is base salary, annual cash incentive bonus for the vice presidents, and long-term equity incentives. Notably, the top dogs, the chairman and president, don't get cash bonus. A lot of information is in this pay versus performance section. The total compensation for the company's named executive officers was $5,308,325. This table compares how much executives made to how well the company performed and what those awards were actually worth. Terreno does not offer some of the awards that have a very special tracking rule because they don't offer it. The Compensation Committee did not take material non-public information into account when determining the timing and terms of equity awards in 2024. Here's something crucial: insider trading. The company has a policy against it, which is fairly standard. This is normal practice and is expected. All insiders also have to comply with the same code as everyone else. They also have a clawback policy, meaning if executives mess up the financials, the company can take back some of their pay. These policies are in place to make sure that executives are acting in the best interest of the company. What about the directors themselves? They get an annual fee of $55,000, and that is changing to $70,000 next year. They also get stock awards, which in 2024 was worth approximately $125,007. They also will see that jump to $160,000 next year. Finally, let's take a look at who owns the most stock. BlackRock owns 17.3%. The Vanguard Group owns 14.8%, and FMR LLC owns 10.3%. These are big institutional investors. Also, W. Blake Baird, the chairman and CEO, owns 0.8%. So what's the story here? Terreno Realty appears to be running a pretty standard corporate operation with some minor changes coming up. The main risk is not anything visible in the filing itself. Rising interest rates would make real estate less valuable and would change how much debt the company could issue. A good point is that demand for these properties is growing thanks to e-commerce and people buying stuff online. The company's direction seems stable, but it's important for investors to keep an eye on those risk factors and also how the company is performing. Overall, the company looks okay. Thanks for watching. If you enjoyed, please subscribe, like and comment.